It's been a busy morning for results coming out of the JSE Securities Exchange, listed companies on that exchange. Some good, some bad, some indifferent. What do you think of these ones? It's Pioneer Foods. These are the interims for the 6 months ended March. Revenue up 11%, also operating profit up the same amount. But if you take into account certain items, operating profit was minus 7%. A dividend was declared and it was 5% up on the previous comparable period. Headline earnings per share, meanwhile, up 38%, but adjusted, they were down slightly. Let's get into the numbers now with the CEO, who's in the Power Lunch studio in Johannesburg, and that's Phil Roux. Phil, let's get the semantics out of the way first. What are the items that have meant there has to have been adjustments?
Largely, there's only one adjustment, Lindsay, and that's in connection with the cash-settled options, the reconciliation with our broad-based Black Economic Empowerment deal that we did, the second phase, and in the prior year it was the first phase. So when one backs that out, you get to the reconciled adjusted EBIT earnings being down 7%.
Okay, let's move on to the results themselves now, the more important stuff. Top line growth is fair, you say. Margins have been compressed, pricing under recovered, input costs rising. So at the top line level, things not looking too bad.
I think they're respectable top line performances, specifically in our beverage and our Bacomo entity. Granted that there's some price inflation, but we've also seen some real growth, good volume growth on maize, similarly on wheat, and on the Bacomo side, we've seen some good volume growth out of our cereals business. Although it's off a small base, the biscuits new venture has done particularly well, growing significantly ahead of the category growth.
When you look at that revenue increase of 11%, you've alluded to it already, but can you give us how much of that was to do with actual volume growth at the top line, and also how much of that was due to in-house or food inflation?
In aggregate, more or less 4% can be accounted for on the volume line, a small amount in mix, and the balance of that would then be in price.
Right, cost of goods sold plus 13%. This is a familiar story, whether you're in the food business or in the gold mining business, costs are going up in South Africa. Where has it come from your point of view?
You would have seen that our direct production expenditure, the guys in the team worked very well, only going up 6%, which says something about efficiencies and management of costs, certainly within the fully absorbed cost arena. The costs really that increased ahead of inflation is your prime costs. So we were in a rising commodity cycle, particularly in the area of maize, and that had a significant inflationary effect on your total cost push in that respect. And why the margin compressed, of course, is our inability, not really inability, because one's cognizant of volume coming off as well, but the cost push was so significant that you err on managing the business on a rand per tonne margin basis so that we don't forfeit too much volume. But unfortunately, both out of the grains entity and so to our agribusiness Quantum, it was so significant, feed costs on the agri side significantly ahead of the price increases we could recover on both broilers amidst imports and also on eggs, which finds itself in a down cycle.
Is that inability to pass on price increases just restricted to what used to be your agri-business? It's now called Quantum Foods. Is it restricted to Quantum Foods, or is it across the board? A, because of competition within the food sector, and B, because of the relatively impoverished state of the South African consumer?
I think it's fair to say that it's a blend. In the first instance, it is not the entire portfolio. So on a category by category basis, you would have seen that we recovered our full cost push on the beverage side, almost doubling the profits. But of course, there was a volume penalty to pay. Our volumes came off some 12%. On the agri side, it was more severe, translating into a 33 million loss at the half year. But it certainly isn't across the board. One really needs to look at the merits and demerits of category pricing and consumer, really looking at what the consumer can bear, because it is a tricky environment we find ourselves in. You know, there's very little category growth. Most categories we participate in are in fact ex-growth.
Yeah, it is a tough time, and we'll talk about the future and the state of the consumer and how you're going to adapt to it when we talk about your prospect statement. Let's go through a couple of your divisions now. Some household names here, of course, Sasco, Bacomo. We've spoken a bit about Quantum Foods, and also we've got Ceres. Start off with Sasco, if you would. How did it perform?
I guess the Sasco performance, whilst the top line was acceptable and you saw significant double-digit growth on the maize side, We probably erred a bit on our pricing front in that we didn't recover sufficient cost push in a rising commodity cycle. That's maize. On the rice side, another challenging position we find ourselves in as a total market, not only Pioneer, in that the Thai pricing is still firm relative to Indian pricing, which is at a significant discount. And when you're in an economy, a protracted value economy, as we find ourselves, consumers make the shift to more affordable products. Fortunately, our portfolio is balanced. Half our business accruing on rice to economy and the balance to the more premium rice. But of course, you couldn't get the price recovery less relative to that cost price coming out of Thailand. On the bread side,
Bacoma seems to be. Sorry, can we go straight to Bacoma now if we could? We've just got a couple of minutes left, Phil. If we go to Bacoma, cereals seem to be doing well for you.
Yes, indeed. We have some great brands, the likes of Wheatbix, Pro Nutro. We've also just finalized CapEx for our relaunch of our cornflakes, which is now a thinner, crispier product, akin to the market leader. So there we've done much better, and you would have seen significant operating leverage coming out of that division. We're still loss-making on our new venture in biscuits, but the volumes are growing handsomely, and this is our market entry pricing strategy that we are imposing.
And finally, very briefly, Ceres, before I get on to how you're going to keep these brands going, how did Ceres do?
Ceres did very well in profitability terms. The international export sales were most pleasing, so we've seen strong growth on the continent and in the developed world, although most of our sales accrue to the African continent. I'm worried about domestic volumes. They came off quite sharply, particularly in the area of dairy fruit blends. So we're going to have to look even more aggressively at our cost base and efficiencies as we approach the next summer season.
And apart from controlling costs and apart from being cognizant of the fact that the South African consumer is a little bit under the heel at the moment, what do you say when you've got some big brands there, some household names, and you go into a supermarket, you see those brands, they're instantly recognizable. Is it the case that during these relatively tough times you start to look to revitalize these brands in order to sort of gain market share?
That's exactly right. Revitalizing our power brands and focusing on them is certainly one of my priorities in a top 5 sort of strategic agenda as I take the business forward. So it's essential that we continue to innovate, ensure that our brands are compelling in every way, and yet remain affordable, which really talks about value, the quality over our price proposition.
Very, very finely and very quickly, you see the habits of the consumer and you probably get an idea of how we are faring before most people do. Are you fearful for the rest of the year?
I'm nervous. There's pressure on our economy with the most recent rand weakness again, which puts further pressure on our cost base and the need to recover price in a market where consumers are already battling. So I think we need to guard against being too bullish. It's certainly a bearish environment, and I think that's going to continue for some time.